My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. I'll be with my friends. I'm just trying to make you a little money. My job, not just entertain, educate, teach. Call me at 1-800-743-CNBC or tweet me at Jim Cramer. Crank it up. I'm talking about the huge number of conferences that Wall Street throws next week, covering everything from banking to healthcare to the industrials. And I can't tell you how happy this makes me. After an ultimately mass session where the Dow finished up 76 points, S&P advanced just 0.14%, NASDAQ gets up just 0.09%, things are going to get a lot more exciting next week. Why? Because so often the filter for companies is dry and methodical. A quarter gets reported, a statement from management, followed by a Q&A, and then some research. Not next week. Next week, we get the real skinny from hundreds of companies who speak for a long time. And let me kick off my game plan by telling you what I think you're going to hear. This is the narrative. And I quote, business is pretty darn good. After all these rate hikes, we would have expected the business would have slowed down dramatically at this point, but it hasn't happened. While we're always wary and our customers are taking a little longer to make decisions, all in all, things are pretty darn good. End quote. Now, I especially expect to hear that sentiment from the industrial companies that speak at Morgan Stanley's annual Laguna Conference, which is one of the most important confabs of the year for the sector. And by the way, I also like the Barclays annual Global Financial Services Conference, where JP Morgan CEO Jamie Dimon is going to kick things off Monday around 1 o'clock with what I bet will be a screed against the idea that we need more banking regulation. Yes, we will be ready for you. Now, this all matters because I think we're near the end of the Fed's tightening cycle. When you get to this point, you see like maybe 5-6 months where we've got left and the Fed's headed toward its 2% target for inflation, well, then you only have a couple rate hikes left. You need to get more bullish on the stock market, historically speaking. But it's always difficult to do that because at this point in the cycle, the Fed has successfully sent the economy into a slowdown mode. So, for example, next week, there will be some companies that may use their conferences to guide down. It happens every year. This year, I expect a few more of them because of where we are in the cycle. And what you have to do is you have to buy the stocks of companies that are doing well, that have just spoken, whose stocks get drowned out and go down because of the negativity of just a few of the companies. For my Travel Trust, now we put a ton of money to work at lower levels before this week. But I am sorely tempted to buy into this latest downturn, especially in tech, which has really been clobbered. And one of the companies we have on tonight, which I just can't wait for you to hear. Now, one of the reasons I'm very excited right now is I'm going out west. We're going to Dreamforce in San Francisco Monday. That's the largest tech conference in the universe, and it's thrown by Salesforce. I tend to learn more about tech in these 3 days from Mark Benioff, founder and CEO of Salesforce, and his team, and all the other presentations than I do during the rest of the year combined. We own Salesforce for the Travel Trust, and I think it's an undervalued stock, especially after that monster quarter. Now, the stock did rally huge after reported. Then it gave back pretty much all the gains, and now it's trying to climb back to where it was after reported. I think it's an opportunity. I'm also excited to hear from Oracle Monday night, which we've been starting to buy for the trust. Both Oracle, run by Safra Catz, and Salesforce have been among the most aggressive artificial intelligence adopters. I find that those who can really use it to save money and time are offering the best of AI for both their customers and the shareholders. These stocks have all had lids on them of late because of Apple's newfound China worries that have thrown a lot of tech into the penalty box. I get there may be some consequences that could spill over to hurt Apple, of course, but I'm not on the bandwagon of doom that so many others have stumbled into. Hey, speaking of Apple, they roll out their new iPhone on Tuesday. Normally, the stock runs up into these events and then fizzles afterwards, but this time it's pulled back hard ahead of the release. Maybe the new phone turns things around, although the first comments, just so you know, the cadence here, are always from the negativists. It's the last comments are from the people who like it. So the stock tends to go down. It can even go down 1% or 2% just on the launch. Hey, by the way, if you want a stock that can bounce off of any of the good news on the China front that's connected with Apple, if we get any, I want you to consider Broadcom, symbol AVGO, which sold off a very good set of numbers just last week and does a ton of business with Apple. Plus, Broadcom has a deal with VMware that would be hugely positive. It's just waiting for Chinese regulatory approval. If there's a thaw in our relations, you get a big win here. We own Broadcom for the Travel Trust because I believe that the VMware deal, which I think is going to get done. But our tensions with China might make it harder for this one to get over the finish line. I respect that. we have some minefields there next week, too. It is a bit of a gauntlet. On Wednesday, we get the consumer price index numbers, and those could easily derail the positive tone I see coming if there's an unexpected flare of inflation. I don't think that's in the cards, though, nor do I think that we'll have an overheated producer price index or retail sales numbers on Thursday. All of these numbers are incredibly important because if we can get through this next week without a wild bond market reaction, I think we'll see a lot of bears converted by the time we get to right here. I'm not kidding. It's an important week. It'll be a tough road. We still have plenty of analysts calling for a hard landing, many of them out today, and a recession, although I have no idea what data they're looking at to reach that conclusion. I expect a minor slowdown. I've been saying that, possibly not even enough to be able to count as a soft landing. Let's go down on Thursday a little bit more. We've got the deadline for a labor deal with the UAW and the big three, Ford, GM, and Stellantis, which used to be Chrysler. Never forget, while Sean Fain, the CEO of UAW, he's actually the head of it, is a very incendiary guy, he knows that a long strike favors the automakers because they have much bigger war chests than the union. Ford has 5 months. The UAW said to have only 5 weeks. On Thursday, we get the ARM IPO, and this is the semiconductor design company whose technology is in chips for virtually every kind of device, although they're best known for the handset chips. Now, I think ARM's artificial intelligence offering is the most exciting part of the story because they're partnered up with NVIDIA on their most important high-powered semis. I like this IPO very much, people. If you can get in on the actual deal, you should. Doesn't hurt that ARM's management is very strong. Then on Thursday night, well, Adobe reports, and I think this is going to be very, very interesting. Why? Because they're making the best use of AI. It's helping thousands of clients build websites that can change constantly and are much more responsive than anything any other company has right now. Last time Adobe stock ran up into the quarter, rallied big after the report. You can see it right here, rallied big after the report, and then got crushed over the next series of days, before then rallying 100 straight points. Let's hope the pattern that you got here where you can buy it after a good quarter is repeated, so you can buy the stock into weakness that will be unjustified. Lennar, a huge home builder, also reports on Thursday night. When it comes to inflation, housing has been the most attractive part of the economy. Home prices just won't come down, even with high mortgage rates. I don't know what's going on. I doubt you hear anything weak from Lennar. It's too well run and too risk averse to have a true debacle, even with mortgage rates soaring. Finally, on Friday, we'll just begin the worry phase of the market. Yes, it always happens. Why? Because the next week is the Fed meeting, and we'll know the next move on the 20th. If we get some macro numbers that are too hot next week, and here I'm referring to the CPI and the PPI and retail sales, well, then a rate hike may actually be back in play. I think the Fed doesn't know these numbers. They're waiting like you and I are. But otherwise, if they're just okay numbers, I think they can skip the tightening this time, and that's what makes me feel a little more sanguine about the market. What else would make the bull case a solid one? Bottom line, interest rates stabilizing even here, and a break in this relentless oil rally. I think both could happen, and if that's the case, the declines we have seen will be reversed so rapidly that you better hope for weakness Monday so you can do some buy. Dan in Minnesota. Dan.
Hey, Jim, how are you? Danny called in from beautiful northern Minnesota up on 10 Mile Lake. How are you today?
I am doing well, thank you. Beautiful day here. Happy to have, that you called in on the show. How can I help?
Hey, thanks so much. I love it. Hey, my dad, Jimmy, started his first restaurant when he was 17 down in Austin, Minnesota, the home of Hormel.
Yes.
And I tell you, we've been a big supporter of their products for over 70 years, as well as their stock. But we haven't seen a stock this low since 18. And we had a nice move up in Q1 of 2022 when it passed 50, but here we are stuck down around the high 30s. What are you thinking about that?
I am so glad you called me. I happened to be looking at stock today because a mutual friend and I both were talking about it and an acquisition it made. And I think that at 3% yield, you patiently buy some. You want to buy 100 shares, you buy 25 right here. And then you wait by yield. You buy another 25 at 3.25, another 25 at 3.5, 3 3/4, and that's about as low as it's going to go. I think you've got a good one there. It's not going to happen overnight, but it's a good stock and a great dividend producer. Let's go to Piyush in California. Piyush.
Booyah, Jim. Thank
Booyah.
you for taking my call.
My pleasure.
My question is Amgen is a good buy? If yes, what would be a good price to buy?
I like this deal. I'm glad that the FTC backed away. I think the Amgen deal, they also have some really good drugs in the pipeline. But the Horizon Pharmaceutical deal, Amgen, is going to be very strong. But I happen to be a big fan of orphan drugs. Not everybody else is. I think they're terrific, and the companies that make them make a lot of money. Next week might be filled with some minefields in the way of economic data. But I think the bull case for the market will only build from here if interest rates and the price of oil behave. On Mad Money tonight, could an investment in Celsius be the right energy for your portfolio? With the stock up a whopping 100% year to date, I'll see if the move can continue when I sit down with the CEO. Then I'm exploring whether the stock up Signet, the jewelry company, could be a diamond in the rough. And RH is tumbling gigantically after earnings. Should we be buying the stock up, or maybe we need to remodel? I'm sitting down with the CEO, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.